Hey everybody, Chuck Barone here. Friday, January the 20th, 2023. Wrapping up a week here. Man, I'll tell you what, as crazy as things were last year, we're starting off with things even crazier this year, if that's possible. It's nutso time, guys. I mean, it's crazy. But anyway, before we start the show, as always, we want to welcome everybody to the show. Thank you guys for your support, watching the video, supporting the channel. We appreciate you guys. We really do. Markets today. Okay, so let's take a look at this. Stock market up today across the board. Good earnings. So today, the market's up because earnings are good. Yesterday, the market's down. Earnings not good. It's just like, there's no real direction for this market right now. I think the market wants to rally, but the majority of the data is pointing to a market decline. So you just got this total weird friction, and the market's looking for direction. There's a lot of uncertainty as far as rates with the Fed, of course, and inflation. So it's just making for a weird time to be an investor, especially in this stock market. Bond market today, though, not much better. Yields up today. So the Dow's up 330. Across the board gains for NASDAQ and S&P. NASDAQ actually finishing the week up. Bonds today down. So you got the 10-year at 3.48%, up 9 basis points. You got the 2-year climbing 5 basis points today, 4.17%. So I guess people pulling money out of the bonds. Even though the bond markets have been rallying like crazy, I read a Reuters article saying that bond funds are getting their big inflows of capital for the first time in a while. And holy crap, I didn't even put a microphone on. So market's crazy. Not a lot of certainty. The strategy that we've been telling you guys to follow, the defensive position, dividend-paying stocks, preferred stocks, utilities, defense, healthcare, consumer non-durable stuff, soap, food. That's what's been working. That's where you guys hopefully have been since we've been recommended at the very beginning last June. Now, this is not a get-rich-quick strategy, guys, okay? There's going to be some stocks, and you're going to see like Bitcoin making this huge rally. And you're going to feel like maybe you missed out on something, but over the long term, and you're going to live a long life, this is the strategy you want to be in. Dollar today, basically flat today, sitting 102 even on the index, down just 2 basis points. Not a very big move at all. Not much room, not much news on the dollar. I think the sentiment seems to be that the dollar is going to go down, but at the same time, we know the Fed is going to continue to raise rates, which is going to strengthen the dollar. So again, you have this weird conflict where nothing seems to make sense. Metals today, mixed. Gold, I think we got a little profit taking in gold today. Last time I looked, $1,927 and change, down $4.60. At one point earlier today, gold was up over $1,935, selling off to end the day down, or end the market, close the market down. Silver today, though, gains, up 11 cents, $23.95. There might be a little resistance here. Remember, I've been telling you guys, as we've been going through all of this stuff over the past 6 or 7 months, round numbers tend to be where you find resistance and support. So silver now, trying to break through $24, there's going to be some resistance there. Once it gets above that $24, that then becomes a support number, right? Same with gold now, working its way up to $2,000 an ounce. You're going to probably, and 2,000 being a very round number, right? You're going to get some resistance there. But, these metals, I think, really want to rally and still have a ways to go. Oil today up, $1.07 per barrel for West Texas Intermediate, $81.40. Looks like oil's got a little bit of a spike going. Well, not really a spike, but a gain, a rise. Looks like the momentum might be toward up. A lot of speculation about China getting in this market, but I mean, these guys, everybody wants to ignore the obvious here. So China opening back their economy up is going to create more demand for oil. Okay. But they're going to buy their oil from their buddies up north, Russia, and they're going to buy it at discounts. So I don't really think that, I don't know if they're counting Russia's oil anymore on the world oil supply, but it's not going to really be very disruptive because they're going to get their oil off the same market we buy our oil from, right? And Bitcoin today, nice gain today for Bitcoin, rallying up $1,224. 22,265. Go Bitcoin, man. I know a lot of you guys are owners and holders of Bitcoin. Bully for you guys, man. Nice rally. News you guys need to wrap this week up. Well, as you guys have been watching and seeing and hearing, we've had the parade of our typical Fed yo-yos coming out, talking, spooking the markets or encouraging the markets. This week it's been spooked mostly because they've really been talking pretty hawkishly. We've heard a little bit of restraint, Fed governors and bank presidents talking about slowing the pace of increases down to a quarter point, which is a normal Federal Reserve rate increase. But it seems to be the unanimous consensus. The message they want to send is the Fed won't feel like it's finished until they get rates up over 5%. Well, right now we're at about 4.35% overnight. So that would give us a lot more to look forward to as far as rate hikes this year. And they've all been unanimous in the messaging that they need to keep rates higher for longer, talking about keeping rates elevated all the way through 2024. Well, let's see if they got the stones to actually do that in the face of what looks like a coming recession. Although, again, there's a lot of conflicting data on the state of the economy as well. But watch out for these Fed guys. What I would do is you got to kind of not listen to the details of what they say, but get the overall message. I think that's probably the prudent way to look at it. I think that from the messaging we've been getting, we can expect the Fed to continue to raise rates. Their target rate is 5%. I think that they're going to go for that target rate. We had Larry Summers out today talking about how it would be a disaster or a tragedy if the Fed didn't finish the fight. Now we're getting to that point in the 70s where they made the mistakes. They took their foot off the brakes on the economy, and it brought inflation back with a vengeance, and they ultimately had to raise rates even higher than they were at their peak to get the inflation under control. So the Fed's in a tough position. The economy teetering, inflation coming down, but still not anywhere near where we want it to be. So I tell you guys, the mission is the same. Save your money. Try to save 10% of your income if you can. If you're going to invest that money and not hold it in simple cash or money markets, invest it defensively. Don't take on any new debt if you can possibly help it. There's going to be better times to borrow money down the road. If you have existing debt, especially credit card debt, high interest debt, do everything you can to chip away at that, even if it's just an extra $10 or $20 a month. Now, I know I talk a lot of, all of this stuff is super easy. I certainly understand that it isn't, guys. It's hard to develop the habit of saving money. There's always something else to do that you want, that you've been waiting on or whatever. But try to find your discipline here. You'll be really glad you did. It'll serve you well for the rest of your lives. And this is a great time to start it because, I don't know. I'm kind of picky when I shop. And I'm a value guy. So when I get out there and I see what they're charging on some of these prices on stuff, I just refuse to do it. And that's, again, I talked about that just on Wednesday. Consumers now taking their turn at the producers and in just refusing to pay these prices. So it's going to be fascinating stuff we're going to be watching and living going on through this year, 2023. Yesterday I apologize for not being able to get out yesterday and put a video up. I'm going to get more consistent, I promise. But yesterday's big news was the employment numbers, and they come out still strong. I mean, they were expecting 220 to 225 are the consensus estimates I've been hearing of new claims. They got under 200,000. I think they were at 195. A big shock. just showing that the Fed needs to keep their foot on the brakes. Employment is one of the main indicators of how the economy is going. There's a lot of jobs out there. Again, there's some debate on that. We get conflicting data there as well. You know, it seems like there's a lot of jobs, but the people who want them don't seem to be able to get hired. They're telling us wages are rising. Are yours? But anyway, you know, we've been hearing, it's just been a total crazy thing. We hear it's so much conflicting data. So we get these employment numbers yesterday, and it's like, wow, job market's still pretty strong. Then today we get Google cutting 12,000 jobs, 6% of their workforce. So we get this crazy conflicting data nonstop. So let's take a half a second before we wrap for the week and catch our breath, collect our thoughts. Where are we right now? Well, the news cycle has just been horrible because it's either been a very negative toward pretty much everything or very conflicting like we've been seeing with jobs in the economy. I think that it's just making everybody feel completely uncertain, and uncertainty is worse. If things are going to be bad, I'd rather know it. Things are going to be good, I'd rather know it than be uncertain about it. I think everybody's feeling this inflation. Not so much at the gas pump like it was originally, but especially in the supermarket. But we're told consistently that the numbers are getting better, even though they're not great. You know, we were over 9%, now we're down, approaching getting under 6% at 6.1. We keep hearing about the employment market strong. At the same time, we're hearing about big cuts in tech, Microsoft, Google, all the biggies, you know, Facebook, Meta, whatever they're calling themselves these days, all announcing big layoffs. So you got all this crazy stuff. Wages are up sharply. They keep telling us wages are up, wages are up, wages are up. Tell me, guys, comment for me today. Have your wages gone up? Have you gotten a raise? Have you changed jobs and gotten a big boost in pay doing it? You know, this is the stuff we've been reading about, just not seeing too much of it with our very eyes. At least I haven't. Now, granted, the industry I'm in, real estate and mortgage, has probably been the hardest hit by the Fed's rate increases. So we're going to be, the guys I associate with in business are all kind of limping along right now, not feeling so great about the future. Mortgage companies closing, realtors dropping out of the industry, loan officers dropping out of the industry. Now, they'll all come back when things turn around, but, you know, so I guess your own personal experience might shade the way you see things, obviously. And so I don't know. I'm going to be, you know, once housing starts turning around, and we're starting to see signs of life in the market now, you know, then I'll believe that this economy's got a shot at no recession. But without housing, hard to have a strong economy. So let's see where all of this stuff goes. Now, I'm going to be back Monday. We'll go over a start of a new week, what we can expect. We kind of had some inklings of what we were going to get this week with Tuesday's show, and we kind of give you guys an idea of the data we're going to be getting and what it should be telling us. The big surprise this week, obviously, was the employment numbers and the inflation coming down way more than they thought on the producer side. We'll see if that translates into more money for consumers and our middle-class friends, better prices, maybe some relief on eggs and butter. But anyway, crazy times. We're going to be here trying not to make ourselves or you guys crazy with what we report. It's a great weekend coming up. Take some time, relax, enjoy your families. Playoffs this weekend, divisional games. My beloved Bills, I had to wear this for good luck today. We got the Bengals on Sunday. It's a scary one for us. I think truthfully, sorry Chief fans, but I think the Bengals might be a bigger threat to the Bills than the Chiefs are. Anyway, so it's going to be a great weekend. We're really looking forward to that. But we're looking forward to being back on Monday for you guys. Have an awesome weekend. Till we talk Monday. Take care and go Bills. Thanks.